I've talked about income splitting through a corporation before in this series, but things have changed. Last December, the Federal Minister of Finance, Bill Morneau, revealed some new rules. And in this video, I want to discuss if and how the changes could affect you, your business, your family, and of course, your taxes. I'm Peter Gay, and you're watching Do It Together Financial Planning. If you recall from my previous videos, income sprinkling is used by small business owners or incorporated professionals to redirect their business income to family members who are in lower tax brackets, usually by issuing dividends. These dividends are often discretionary, so the owner can direct any amount in a particular tax year to a given family member, so long as they're shareholders of the company. Now, this only worked for lower tax family members who were 18 years old and older, because of what's known as the tax on split income, or TOSI. Or in the industry, it's known as the kiddie tax. Family members who were under 18 have the highest marginal tax rate applied to dividends like that, so that was never an option. I don't want to get into too much detail about the basics of income sprinkling, so I'll link to that video below for a refresher. The government has changed these rules specifically to target incorporated professionals, doctors, lawyers, and others, who are benefiting from lower tax rates on what would have otherwise been fully taxable income at the highest marginal rates, if not for the corporation. In other words, the government's essentially making the argument that these incorporated professionals aren't adding any economic value to society by their decision to incorporate, and should therefore not benefit from many of the tax advantages of doing so. So what are the changes? The TOSI rules have been extended to cover adult shareholders of private corporations as well as the minor children that it already applied to before. The question then becomes, if you're a private corporation owner and would like to pay dividends to relatives who are shareholders, when can you do so without being caught by the new rules? Essentially, to escape these new rules, you have to be able to show a significant involvement in the business. The federal government is putting what they're calling clear bright line tests, or off-ramps, to exclude some family members from the new TOSI rules. Let's look at these exclusions. One is for the business owner's spouse, providing they're over 65 years old. Another is for adults over 18 years old who've made a significant labor contribution to the business, which the CRA is measuring at an average of 20 hours a week during the year or during any of the 5 previous years. Here's another. If you're age 25 or over, you can be exempt from the new TOSI rules if you hold over 10% of the share value of the company and it earns less than 90% of its income from the provision of services. This exemption doesn't apply to professional corporations though. And finally, if you receive capital gains from qualified small business corporation shares and they're not subject to the highest marginal tax rate on the gains under existing rules, the new exception rules will apply. So what happens if you don't fall into one of these categories? Well, anyone who is 25 or older who does not meet any of the exclusions described above would be subject to a reasonableness test to determine how much of any dividend they received, if any, should be taxed at the highest marginal tax rate. In certain cases, adults aged 18 to 24 who've contributed to a family business with their own capital will be able to use the reasonableness test on that related income. Now, one of my pet peeves is that this has only made the tax code more complicated, which adds more potential for unintended consequences. There's no doubt that these rules are messy and will have accountants working lots of overtime to figure out to whom and how they should apply. As always, I'll put some links below if you want to read more about the new changes. In my next video, we'll look at the new rules about passive income or investment income inside corporations. So don't forget to subscribe to get the notification when that video goes up. Please remember, share, follow, like. Thanks so much for watching.